guys good? Ready? Touching?
Almost.
What?
All right, we're ready.
All right, good. So first, I want to address a couple of questions came about a trade that we took this past Friday. Actually, catching rockets. It was you who asked about the trade. So what I did last week, I took the week. As you guys know, I like to keep the weekly POCs on. So what you do in that case is you grab it from the first. You could grab it from the Sunday, but it really doesn't change much. Grab it from the first and go all the way to the current. So at that time, my current was, when I take it back, it wasn't here, obviously. It was somewhere around here that I was grabbing it. I think it was like somewhere around here. But if you look at the volume profile at that time, you go back and replay, you'll notice that there was a major shelf. Let me remove this. You'll notice that there was a major shelf right here. And if I just put that volume or level on that highest shelf right there, you guys see where I rejected? So what I was
Yeah,
looking for
you
was you guys.
actually you went short. I mean, I don't know if you went short on that candle, but it was actually the next like wave up was the one.
Well, I shorted here heavily on the 4100s, about 7, when they were 687. This is where I added the most here. So is this what you're talking about or something else?
It's the wave right after that one.
This
That
one
one.
here?
Yeah, that's where I went short, I think, and you went long.
You went, I went long
I mean,
here.
I went long, you went short.
Oh,
Yeah.
I was about to say. Okay, well that one's fairly easy. So this was one. This one was our previous low. We broke that one. We came to retest that POC at that time. So if you look at it, this was the highest POC, and even now, very close to being the POC. So when it came there, this was the lower high for the day, right? I was looking for a rejection right here because this is a previous low. So my first entry would have been here, and my stop loss would have been right above it.
Okay.
Right? You had the value area high. So I was betting on what was previous support to become resistance now again. And that's kind of what's happening here as well, right? So you have it here and you see a nice rejection again and then a little, a pump after hours at 6 o'clock on Friday, which doesn't really matter. And then they're able to go. But the whole day, I think we had like a really nice triangle here. You could have gotten it here, knowing minimal risk or reward. And then if you go on the bottom, it had a really, really nice triangle as well. And now we're still kind of battling with that. So if you're kind of trading futures, this would be your level to short. Would be kind of like right here. You break this, come back, and your first reward would be around 41.12. You do have this POC here. So you have about 20 points drop here on futures if you break this little box.
All right, makes sense. Thank you.
Mm-hmm. All right, so with that being said, I'm actually going to switch the tickers over either Qs or SPY. Let's see. So let's go on. I just want to make sure, revisit the naked trading part. So if you are struggling a little bit with trading, if you're fairly new to trading, you want to understand the naked trading, just kind of by itself, right? Without any indicators. I'm showing 0 indicators besides volume on the bottom. It's really not a lagging indicator, it's just a volume that it's occurring. So what I want to show you guys, let's start from COVID lows. We'll start on weekly, just kind of speed up the things on the side. So as you guys know, we had the pre-COVID low, then obviously the COVID happened, and then we got the massive drop, right? So this level here was the pre-COVID high, as they call it. In technical terms, yes, this is the higher high, and then we made a lower high, which is right here, if you guys look. So we made a lower high, lower high, lower high. So once we're able to take this level out, then you guys see that we broke it. And what do we do right after that? We usually tend to come back to these breakout levels to make sure that these buyers are serious and that we can continue going higher. And then usually a reversal happens when you break the structure of this. So this is your last, lower high in the downtrend. Then you break it, but the change of character where the supply actually broke, where it triggered down, this is your change of character feature here on this drop, right? So as we call it, this is your change of character. This is where the stuff is reversing, really. So you break the previous high and you proceed higher. The only problem we have here, we have never revisited this level here. And just quickly, in IWM on small cap, we revisited this level here already. So if you guys look, that's where we came for a bounce, and now it's kind of going higher, and it looks a little bit healthier than SPY actually. Does everybody understand? Was I on Qs or SPY? Qs. On Qs. So far we have lower highs, and lower lows. Lower highs plus lower lows. That sounds like that is a bearish trend. Once you start making higher highs, so this would be your first higher high, and thanks to sequence, we have this ability to do this. So you have a higher high, here's your higher low. In between here, since we're on a weekly chart, it's looking at major cycles. Let me just take some of this stuff out. Where's the boxy there? Okay. Now you're making a higher high compared to the previous high, and you also are making higher lows. I mean, here you made higher lows all around. You're point higher, so here's a previous higher low, higher low, higher low. You're making higher lows, so higher highs plus higher lows, those become your bullish trends, right? And if any other combo you have that's not higher high plus higher low, or lower high plus lower low, which is bearish, any other combination of these, higher highs, higher lows, lower lows, it's a consolidation. And what you want to do is you want to connect the tops and you want to connect the bottoms. What I mean by that, when you connect so in this case, you see how this was a higher high, this was a lower high. You connect that one, here's a higher low, you connect those higher lows. And now you have what? You have a triangle, right? I mean, not say, you have maybe a bull pennant here forming. And usually what people would do, you can play the trend line break, which is this break right here. You can play this break, right? And you would put a stop loss somewhere right below, depending on where the candles are. Information is probably not on the weekly, but your entry can be here on this candle alone here. Once you break this candle, you can go along here. What I preach is what? Catching rockets. Where would you take this trade?
The retest.
Yes, you would go on a retest, and your entry would be here, because now we have a little bit more idea what the buyers are doing and what they're defending, right? And how would you know where to take your money?
Probably that higher high.
Well, you wouldn't know this higher high. Well, this one is first one, correct? You would know this here. This is your first profit. Let's say you're like,
you could also draw fibs on the triangle.
Oh, look at this. So if you take the fibs of a triangle, you grab the swing high to swing low, you're going to hit the 127, and then you're going to hit the 1618 on the penny, right? So your first target on the fibs is always 127. So in this case, if you took it on the breakout here and you put it, your stop loss is 61.8, you're giving 283. So let's just look at it real quick. So let's say you took it right here, your stop loss would be right here. Your first trigger would be here, which is 264, and the second one would be 459, which is a pretty good reward when you look at it like this, price action trading. Or if you took it here, then your stop loss would be maybe a little bit below this candle, body of this candle here. Keep the stop loss tighter, and then go, right? If you took it off of this one. On the retest, you get a little bit better idea how you can play it, right? Because you know where the wicks are. So if you put it right below these wicks here, you would get an idea where they could try to go for you and, kind of stop you out. And if you look here, this was a really good candle to use. So far, everybody good on higher highs, lower highs. So when you're making higher highs, usually, uptrend that we had for past, I would say 2 years, when even you look at on this chart, it was higher highs, everything was green. And then when does a bearish trend start? Well, here you have a higher high, and you also have a lower high here, right? First of all, this, if you're familiar with the Wyckoff, this is called a distribution phase right here. And usually these occur at the top. Accumulations happen on the bottom. So here you made a higher high and you have a lower high. Right here was your higher low. So now once you make a new lower low, which was this one right here, this confirms what? Once you broke this, previous higher low, and now you set a new lower low, this confirms we're in a downtrend, right? Overall, as in Qs as a stock market. So now you have, lower highs, and you have lower highs again here, and this little peak, and now, this code's not catching it properly, or I don't have the settings. But here, we are trying to reverse and break what? Anyone? What's this called?
That's a break of character.
This is break, right?
Yeah.
This is the first one is the break of structure.
Sorry, break of structure. Sorry.
Yeah. The break of character is where the supply, where the imbalance happened to break, right? So if you look here, this was your structure going down, and this change of character here, this supply, this imbalance caused that break and went down. And same here, right? This was your overall turn, and this is your break of structure. Well, the trigger started here really on the flipping of the character. So if they can reverse this, eventually 371, there's a high chance that we're going to be going towards the new all-time highs. But before that, we know the 330 level is going to be super, super important. So in Qs, right, I think we hit 325 or
That's
something like that.
He's unlike me right now. Oh, shit. Win loss chat.
I'm not sure if you're talking to me or...
No, I don't think they were.
Okay. So far we got the lower highs, the lower lows, the bearish, higher highs, higher lows. Now, the best part about this, guys, is that you can use this literally on any time frame. For a lot of you new guys, what I'm suggesting is when you start trading, learn how to trade without it. You can even use ASCII candles, which are not recommended for price action, but who cares? They're not recommended. Speeding is not recommended, but you guys still do it. So for you guys to avoid a lot of fake outs, I do recommend that you guys start using some ASCIIs and just price action trading, right? So let me just add the session breaks here real quick. Okay, so let's kind of start from here. Yeah, sure, maybe. Yeah, let's start from here. So here, we start the day, we make a new higher high, which would be what? After you make, you set your imbalance, balance for the day. This is your imbalance, initial balance high right here for this day here, which was July 29th. Then you set the low here. I'm pretty sure you held 50% here, or something like that. So let's see, you held 38.2 to 58%, and then you kind of went on the day for that day particularly. So now this is your high for the day, but it's also going to be used probably as a good support and resistance moving forward. So we broke that towards the end of the day. If you're not familiar, learn the type of days they're posted in the Trading 101. So this started as a typical day and ended as what?
Extended typical.
So this ended up as an extended typical, and usually we break this between 2 and 4 o'clock extended typical days, right? I'm surprised we didn't get a retest this day, but look, we got it the next day immediately. So now we know this is a kind of higher high here, and then you're making lower highs here. So I'll just go on the regular candles for myself. So here you go. So higher highs. Once you're able to break this level here, this is a pretty good long, especially on the retests, right? So here, if you're a momentum trader, sure, a lot of people probably took this. But then when you come back to this area, you can expect a bounce. So here we dipped below, we gapped below this. Once you're able to reclaim this was a pretty good level to go ahead and go along. And if you did, 314 to whatever we ran, 318, that was pretty good, $4 on SPY. And then you made a higher high compared to the close here. So if you look at this level, sorry, clicked the wrong one. So if you took this level here, we made a higher high. Let me just go in 10 minutes, might be easier. So here's your higher high in 10 minutes. We're not able to break this level as you guys see it. We go down, so we're making lower highs. Go here. So you're making a bunch of lower highs here, lower high, rejection, rejection, and then you're kind of breaking this. So if you go down the line, right, if you go lower high, lower high, lower high, so this is where they're trying to reverse a little bit of character, and it looks like a little bit of consolidation, not a lot of movement, choppiness. this is your level for breaking, right? If you're going to go long, this seems to be a really good level for breaking even out of this trend line. So this trend line here, and what I preach to you guys is this worth it, right? So this area here is potential for rejection. If you take it off the trend line, you're most likely going to reject this level here. So what I suggest is that you wait, usually on a retest here, or if you're a momentum trader and you like to grab 10-15% real quick and be fast on the trigger, you can get in here, but you cannot expect to make 200-300%. It's much easier to wait for a retest. And here, even if you go in 5 minutes, I don't think they ever gave you a nice retest, right? I mean, if you're watching candles, the candle should be getting smaller as you're approaching support. In this case, this was a big full body candle and kind of sliced through it, and you see the volume on the bottom is starting to pick that up as well. So the best thing you can do now, I'm adding volume profile to the picture, is what? If you want to know where this bounce is going to happen. How would you know that?
Well, you want to see like multiple touches.
Yeah, add volume profile. How would I know where this is going to bounce? When I, how would I know where to get in addition to the higher highs and lower highs? I want to add volume profile. Where would I grab it?
Low to
grab
high.
It long.
Low to high.
Yeah, lower high, but I want to grab from the bottom of this swing low to the swing high.
Yeah, that's what I meant.
And I want to
from the low to the high.
Okay. Yeah. So I was not following. So here, if you look at it, right, so this is where a lot of volume occurred when we were going up. On this bullish run up here, a lot of volume occurred right here where I highlighted with the green little box. So what that usually means is that if you break this box here, there's a high chance that you're going to start running. But usually, typically, 99% of the time, you're better off doing what? Waiting for a retest. And here, they never gave it to you. They took off and literally never did. And then you come back to the higher highs and lower highs and naked trading, and you see here that this level here, let me just do this. Let me extend this to the right. If you look at this level here now to the right, this level here, which was our highest high on this whole run, we failed to break it. We made a lower high here. So if you're drawing trend lines, we failed to break it. We came back though, and we retested this level and popped, right? But then look at this, and this is straight from the example that we even have in the PowerPoint. What does the PowerPoint say? This little break, you don't have to ever count it as a break and a retest. This right here, don't count it as a break and retest. You want the price to do what? You want the price to go away and then come back to it. So your real buy happens to be right here. Do you guys remember the graphic from the PPT or PowerPoint that I posted on volume profile where it had multiple touches on support? So it looked like something, where is it? It looked like something like this, literally. It did this, and then finally broke. They shorted it here. It popped over that resistance, which was this line, and then it came back, and then you take it long here. This is the ideal place to take it long. So support, break it short, break it, come back, and then go long. That's the point of naked trading, is that it requires patience and basically managing your risk and your reward a little bit better than what most people do with a bunch of indicators. So here, if I knew this was my higher high, I'll let them break it. And right here, you're able to get in on this trade and drive it, 318 to what, 322. That's a perfect trade. As soon as they came back to this demand, this was golden, right? So now, let's say you're like, okay, well, how do I know that this area is going to hold here? Well, you could do one of the things. You could grab this, right? And I don't know, where do we go? Let's say you knew this date up until this date here. What's happening here? How do you know this area is going to hold now?
You have a volume shelf right there in the middle.
You have a high volume node right here, guys. And it supports what? The idea of retesting the previous high is supported by a major shelf at this time. So now for you to go along here, it was pretty much, as I call it, easy money. If you go along in here and they dip it below, you executed the trade that you should have been. You should have had the stop loss probably here on the previous round of the value area high right here. So your risk would have been probably minimal, right, in terms of exposure. So if you went in here, and let's say you're like, okay, I'm gonna go this way, and your first target is right here. 1 to 5 trade, probably not bad for intraday trading for what we do, right? This is a hell of a trade in my mind. And you know that it was going to reject right here. So there was a value area high here. You use the top shelf and the bottom of it as a first target. And then the second target would have been probably somewhere around here, this little shelf here that was existent. And that would have worked out nice, right? First, second, third, or if you want to treat this as one, you can definitely use it because they're very close. So if this zone here was your first target, then the second target, and you see now you got 2-to-1 trade here. Do you guys understand how to tie the previous lows and highs, resistances, and using volume profile to help you determine? So far, so good. If you don't,
I'm missing the retest.
Okay, fair enough. Okay, well let's go on 65 minutes and see if it helps. So far you see that we had a nice consolidation here, and then we had a drop, right? So if I wanted to know from where we dropped and see where the sellers are, I would go from this box here from the beginning to here, right? And what I would do then is draw my POC if I can. So I'm just giving you my whole dump right now on the brain. So then first revisit to this, what do?
Wait for
so first revisit to the POC from the bottom side. You want to do what? As you're coming down and the heaviest volume that was accumulated here, you're approaching here. What do you want to do, guys?
Okay.
Draw your box.
breach it.
Well, you want to, in terms of trades, you want to short this guy here, right? So if you look to the left, let me go on 10 minutes. Okay, so if you go on 10 minutes, you want to short this guy and put your support right, kind of above it. So look here, if you took this at 304, you took this all the way to 300. On the first tap of that line, you made $4. We are not able to, you do not want to take the trades inside this range. We say never take the trades inside the zone. But once you're breaking the zone below, you can short it again, right? So this is just price action with the volume. I'm just going off of the sell-off and where I can expect sell-off to occur. First zone was right here that we could expect it, right? So they're able to break that, and you see how choppy the zone is. And in between, there's really not much volume. So it tells you that the structure of this sell-off was not really heavy on the bottom. There was a lot of sellers here at this 306 level. They're really accumulated at this level here. But that's only from this sell-off here. And I'm talking about, May 26th. So let's say June 16th, and that's when we started the bull run. So now, let me just kind of explain what you're talking earlier that you're not following. So let's see if this helps. So here we had the sell-off, right? And then you have the lower highs. You have a lower high, you have a lower high here, you have a lower high here, and then you started kind of consolidating and curling a little bit, right?
Yeah.
So here you have a previous high or lower high here. So if I draw that line, once you break this line, for instance, you can come back for a retest, right? So you see here, we broke it. You probably would have gotten out in here and you would have lost money because it would have stopped you out because we continued down, okay? If you're using price action alone, you would have lost this trade. And then you reclaim this level again, right? You go here, you come back quickly for a revisit here, go up, revisit. Some people would take that. It's not the ideal trade that you want to take because it's not a real retest. And then they take you again on this support resistance here. It's telling you the buyers right here are what? They're really not respecting this level. Their own level here on the previous high is not really being respected. So one way you can figure that out, and what I'm suggesting is that you use volume profile in addition to this previous high. So this is my previous high, lower high. Now a new high was made. So this high is higher than the previous lower high. So that makes this one to be the higher high, correct? So now if I take,
But the previous high, why are you using that previous high for your line? For your,
this one here.
yes.
So that was my previous high right here. I'm trying to draw a line here. If I was at the time, let's say I was in the middle somewhere here. Like let's say that, we're in June 17th at 158. I'm waiting here. Either we're going to break it, short it here, or wait for resistance. According to the volume profile that we had earlier, there was really no reason to short it here because there was no volume or any rejection until 288. So for me, this was telling me that this high was not going to be very strong. So for me personally, I would have expected this to be the weak high and kind of break through it, even though the candle here was telling you big sell-off occurred, right? But the volume was really, really above that. This was almost like a little trap. And you see in the future, this level never acted as a bounce pad because it was really never relevant. And that's what a lot of candles and people that use just wicks, they see that. They don't see much of anything else. They see the wicks and they're like, okay, I'll get in on this candle on this wick break, but they don't see anything else. But now if I draw my zone, let's say we remove this one, because we're using the higher highs, lower highs with the support of the sell-off, I'm able to see where the previous highest volume was. So if I was going to trade it, you break this level, my entry would have been here, and I would put my stop loss right below, and I would have been stopped out. Then you come back, and you see how choppy we are. And here, we really never had an amazing setup to take it long. Now, if you come back to this, somebody's not on mute. So now if you're going, somebody's not on mute. So now if you're going, thank you.
Sorry, it took me a second to find them.
Yep, so now you see here, even though it looks like a ascending triangle, it looks like a format that you call this an ascending triangle. You're making flat top with higher lows. The only thing you're missing here to be in a bullish trend is a higher high. And boom, you get it here. So this break here should have held and should have respected, but it didn't. And it's not being respected if you look, because there's not a lot of volume built from here, to here. And even if I change this guy now, and I look here, let's take a look at it, how it changes it. So that volume is still not really heavily built here. Even as they're building this breakout here, they were not really building anything crucial to know. So now let's go all the way to the breakout, and you see here, once you break this level, there's a little gap right here to 298. So it was about $2 that you could have played just on the break right here off of these levels. And I'm grabbing it right below the volume profile. I'm grabbing right before the breakout so I can see how's the volume structure looking. And here you're able to grab that, and then naturally you should know, right, that this should be your, this should be your first support or first resistance is right around here. And then, if you look at this, the whole profile from here, you'll see that this is a P-shaped volume profile. You're going to have a POC running right across. Okay? Does this help, or you're still confused? It's okay if you're confused. Maybe you lost.
Oh, I think I server muted them. Sorry, Henny. Let me unmute them. But they also said they keep dropping off. They're actually not in the chat right now. So.
Okay. Does it make sense to everybody else how we did this, or any questions? Higher highs you can play on the breakouts and retests, meaning the higher lows and higher highs. When you add the volume to it, it will add you a confirmation if that's a weak high or a strong high, so you know what you're dealing with. Are you dealing with heavy sellers, or is it weak sellers that are around? Obviously here, there was not a lot of sellers at this level, so they were not really, aggressively protecting this level, because you're able to make higher lows the whole time and accumulate right below this resistance, and that resistance had a gap above it. Here when we broke this above it, a good entry would have been here. If you're trading professionally, your stop loss, you would put it kind of right here and go long. So if you look at this, so if you went long here, your stop loss your first, you know, target would be this level right here, which would have been 2-to-1 trade that you would have taken. Could you have made the, you know, a little bit less risk here and push it to this wick? Probably, you know. If you push it any higher, obviously to the previous resistance or support, there's a high chance they're going to stop you out on that trade itself, right? So does it make sense so far, the naked trading? And you can do this on any time frame. I can do this on 5 minutes. Let's look at ESC if it's moving today. Not really. Let's BTC USD. Okay, so let's take a look. Oh my God, what is going on with Bitcoin? Look at this price action. Okay, well, let's take a look at Bitcoin here. So it had a higher high, lower high, lower high. So if you wanted to really connect these lines, you could do this. You could go long on this break right here. So usually the first break, and they will come back usually to that retest. And from there, you can take that long, okay? So here, you have a lower high, lower high, lower high. So this is your last lower high, and this happens to be your breakup structure right here. So if you look at it, once you break this level, you're breaking the structure. And then once you break this level, and this is only in 10 minutes, so don't get your hopes up if you're Bitcoin. This is just your change of character. Once you're able to break this level, there's a high chance you're going to change the characters. How do you play this, right? So you have the lower highs. Let's say we're here. They drop it. Now you have the lower highs. Usually you can play the retest from the bottom. And this happened on SPX on Friday. We gapped down, then we accumulated. I mentioned to you guys 39, 13, or 18. I don't know what level it was. Once it breaks, you can go long. And that's what happened here. They accumulated, they dropped it, and then we made higher lows, right? So you're accumulating with the flat top, and you have higher lows here in this area. Once you break this, you can go long on this level, or you can go on the retest. I mean, even here, you know, a quick retest came back, and they went long. I don't really consider those to be retests when it just peaks above it. I want that stock to actually, or, you know, whatever the instrument is, I want it to go higher. You know, was this a good, you know, break here? You know, you go from 23 all the way to, that's not bad. I mean, you could consider this to be the retest, and look, it comes back here. You take that and you take your 10, 15%, and you're done for the day. And then you see how we went a little bit higher. We broke even the change of character here, and you came back to that and you tested it. You lost it here again, meaning you went below it. You came back and boom. And now you're kind of really fighting at this level, at this range since, what's this, August 6th, right? So what is that, yesterday? You're still fighting with this, right? So the only way you can go along right now is on the momentum on the breakout of this level, or if you come back to 2305, put that and put a stop loss right below it, and you can go long. Because right now you're making higher lows. This is your previous higher low here. Let me change this. So this is your previous higher low here right now. And then you have another one right here. So you're making higher lows if you look at it, right? But you're also making lower highs. So if that's the case, you can do this, right? You connect your lower highs and you have your lower lows, or higher lows in this case. And now you have the levels for potential bounce. Where can you play the bounce, right? You know, if you're going to make a higher low, most likely you're going to be coming back to 2154 to get some kind of level on the bounce. So now what I'm suggesting that you guys add to your ammo is, well, if I grab it from here, and I know this level is the high, right? I don't know if it works on Bitcoin, guys. I don't trade Bitcoin. Probably not. Yeah. Anyways, I would have grabbed from swing high to swing low, and I would expect to see, you know, just looking at price action here, I would expect to see some kind of bounce coming here in this area. Does that make sense? How to use the previous higher highs, lower highs to confirm with the volume profile? Does everybody follow or not? Does everybody follow?
Yes.
Yeah, it's super informative, Shorty.
Because this is one of the best setups that you can play, guys. This is pretty deadly when you combine the two. this becomes really, really, really powerful. And I mean, we've been running a lot lately in terms of SPY from the 16th. So the best thing you can do now, and we're going to kind of deviate towards the watch list and use the same tools. So you see from the 16th of June that we've been really, really taking off. I mean, I'll grab it from all the way here, and I'll grab it to the current candle, and this will give me, where are a majority of the buyers lining up to be, right? And if you guys know, if you're not familiar, so the orange line is considered a POC. This is where the highest point of volume was traded at this level. So it's called point of control. And this is where highest volume was traded. And you cannot ignore the other shelves here. So if you look at this shelf here, I mean, this shelf here looks pretty big as well, right? The 384. If you just look at these support zones right now that we got, every one of these is going to trigger some kind of reaction out of the market. Like there's going to be buyers that are going to be protecting these levels. So if you look at this one right here, what is this, 396? And then the last area of support before, if we decide to go, you take a look at this little guy right here. So this is where basically we have the next level of support and resistance plus this one that I somehow missed. There's just a lot of them here. Okay, so now you're able to see where the buyers were heaviest on this run here. So if you pay attention to this right now, let's kind of go, sorry, it pisses me off when they're not lined up. So now if I zoom in a little bit, the highest volume that happened is right here. So, if you're a swing trader, will this ever be revisited? I am pretty certain it will be, right? I mean, all these levels get retested, but, when you're trading options, the time is really, really important. So for us, this value area high, this is where, a lot of it happened as well, but you see that they're accumulating the volume here. On this whole bull run here, there's a nice little high volume node being accumulated right now. If they're accumulating to go higher, well, then we know, you got to break this level here. 415.64, you break that, and there's a high chance that you're going to go higher. And then I would say even on this, you have 427. I thought there was a 417.44 level. Maybe, I don't know where I got that from. I don't know why I had 417.44 on SPY. Does anyone have that level by any chance? I don't know if I'm losing my mind with numbers. Okay, maybe I am. I thought I had 417.44 somewhere. Let me check daily candles. I don't know. I really don't know. I had it somewhere. Anyways, so this would be the level kind of that you can go after, right? 415.64. And if you guys look, these are pretty much identical setups here. If you go on like 2 hours, 3 hours, as before. So here, if you look, there's a little consolidation right here, which we know, and I'll show you that. So there's a little consolidation box right here. And now, what do you see here? It's the same concept here. Now we just have to figure out which way they want to go. You want to go higher or you want to go lower, but it's the same two boxes accumulating. You dropped, and you're bringing it back to the, unless you're, your first drop here, which is the sellers were like, hey, we need to clear out the inventory, and then they sold off literally the heaviest here, and you see the volume picking up really heavy. Now we're coming back first time to that zone. Usually what that expects is that last time you would expect it to have a rejection here and kind of continue down. But let's see, right? I mean, the government's supposed to slow down on quantitative easing. I think they reduced it by 2% so far since March on the balance sheet. So I don't think they've eased down on spending and buying stuff. I just think they're saying that for the moment. Then what I do typically is, if you look at this, I want to see the whole sell-off, right? So this is, it's not that high. If I look at the whole high here, is that a high? I thought it was 480. Okay. So if I look at the whole sell-off here, I'll be able to know where the heaviest volume was, and well, potentially, if we are able to break these levels, right? So you see this shelf here, if you're able to break it, you're probably going here to 417.95. POC 417. Okay, maybe that's what it was, Rexet. And then you see each shelf, and then you get really, really heavy in volume in this area, and then the POC of that whole sell-off is somewhere around here at 443.56. So if you go here, we did not discuss the 1K yet. So if we are able to break, let's say 415.64, I would say the 420 just being the even number and psychological number, that's probably going to come really, really quickly here. You're going to come into this shelf really, really, really fast. I mean, you're going to be flying to this area right here. If you're able to break that, you go here. You want to kind of wait and let it cool off on a retest, and then you go to the 427 area. And if you look at the volume profile, once you're able to break this level here, I would say 421.17, you really don't have much till 425. So then you have 420, 425, then you have these candle patterns at 427, and then it's a lot of chop if you want to, there's a lot of volume here between 430 and 443. Can they push it? Yeah, of course they can. I just want to, there's somebody that uses RSI, and I saw a picture they posted here. It looks something similar here. I want to see who can catch it. Between this box and this box, something looks very identical.
You're almost overbought.
They're what?
Overbought in our side.
So if you look at this, how's that look? Trying to move this. You guys see it now? So there is a bearish divergence building up in this range again. And it doesn't have to be a huge divergence here. It's just that there was a seller here. And, we have the value area low. There's a lot of volume here being accumulated. You see that there's two volume nodes almost ticked right here as where we are right now, currently all the way down. Once you break this level, $5 run up is pretty much imminent. So long 415, 16, 4 to 420, fairly easy. And then, if you're going to break it short, they'll find the short level here shortly as well. Everybody's looking at the level, right? The low and the range, which is the right thing to do. So if you look at this, I would say once you break this level here, 405.53, for us, it's going to mean that you're going to be going to this 395 level. Okay. And Dr. Evil, point of control is where the heaviest volume was traded on the stock. Okay, so probably go along here and we'll take a look at it. I don't know how it looks in 30 minutes. So for anyone that's new, when we trade, let me just take this crap on the bottom. When we trade 30 minutes, what we do is that we'll mark it on 30 minutes on TradingView on Thinkorswim. If you're using that, it's 30 days, 30 minutes. And then under indicators, if you go here, you go under technicals, you go to volume profile, there's something called session volume profile. You want to put that on. I already have it, so I'm not going to double click it. It's right here. It'll give you these little, volume profiles, and each one of these profiles represents one day. So you basically take a look at these, right? And you can see, the value area here is kind of making higher highs. It did here. Now it's making lower highs in terms of the value area. But then what we notice and what we go for in this Discord is we try to find these POCs, like for instance, this one right here. And we could call this one maybe no longer a VPOC, but just a POC. So let me delete this line.
Shorty, really quick, while you're not talking, I just want to emphasize, do not use the session volume profile HD. A lot of people think HD is going to be better, and they end up getting, like wrong POCs and stuff like that.
Yeah, I don't use it, and I don't even know what it does.
Yeah, I don't either, but I'm just saying I get DMs, people asking, and then it takes me a minute to figure out they're using the HD one, so I'm just specifying don't use that.
Good. Okay, so now we know this is actually a VPOC here, and what I'm going to do, I'm just going to copy this guy here. And now if you look at this POC, there's a VPOC here as well. So now this 396 level and the area that we drew below becomes that much more magnetic to going down. So once we lose this 406 level, if you want to call it, I think it was 4055. Once we lose this VPOC here, so which is 40528, there's a high chance you're going to be going here. And how can you tell? If you look at the volume profiles, what's there holding this? Look at the volume profile structure between these two. So you had a bullish one here called the P-shaped volume profile, and then you came back right here. You see that you have a low support here. We never revisit that, right? They should have dumped it here and then proceeded higher. They never did that. So now they left, a VPOC here, and we're probably going to go here at some point, sooner or later. You left another VPOC, which is right here, right, 396.4, and a really poor structure in terms of volume profile. If you just take a fixed volume profile from here to here, here you go. So there's really tiny little bit of volume here. Look where the POC is on this whole run up. As it should be, it's on the bottom. So there's a high chance, all of these low volume nodes are going to be killed once the bears press in and they start selling those iceberg orders. This will not be able to hold it. Guys, please go on mute unless you have questions. Okay. So we know that we have a couple of VPOCs lined up, and then there's another one kind of like right here, if you guys look at it. So there's another VPOC, and I posted this over the weekend on Twitter, and I gave you guys a PDF as well, if it was actually off of these charts. There's another VPOC right here, and the VPOCs are probably, I would say, 10 times stronger than the regular POC in terms of magnetic price movement towards it and reaction at it. So this one here will be just a regular POC. They dumped it below, they came back here. So this is just a regular POC for now. This is a regular POC. You can mark these right here.
But I have a question.
Sure.
So you said if we broke under 405, it's high chance we'd go to
396.
396. Would you be looking to go long on a retest of 405 too?
On 405 here, yeah, I would go long on the first tap of it. Yes, I would go long. Once you breach this area, I would wait for a retest and go long, go short 396.
Okay, cool. Just making sure it's.
Yep. There's a high chance you're going to get a retest. It's just that it's a very poor structure, right? So if you grab the low all the way bottom, right? So call it July 14th here. You grab this run here. You see the structure is really poor here. There's a little bit of volume here, tiny low volume node holding this. Well, Dave, if you're a buyer, right? Think about this shelf and what it means. If you're a buyer here on this shelf here, you bought some shares. I don't know how many shares. Let's say you bought 10 million shares. And you're like, man, I'm just going to, if they bring it back, I'm going to buy it again. And this guy puts an order, let's say at 406. He's like, I'm going to go long. I'm going to defend my long position. So when it comes back here, like this one here, I went long, price did this. And now when it comes back here, he's like, man, I'm going to go long. Well, if he goes long here, well, think about these sellers, if they are sellers, and they could be, and we'll find out probably within a few days. If these guys were sellers, they're going to send a lot of orders, large orders to be executed. So his buy orders are going to be literally accumulated by all of those master, as we call them, iceberg orders that are going to be here. So let's say he puts in $10 million order buy. Well, this guy is trying to get rid of, look at the shelf difference between here and here. This guy was trying to get rid of 100 million shares. He's like, oh, okay, well, thanks for liquidity. Thanks for buying these 10 million shares. And then he goes down again to this level. If this buyer is no longer here and offering 10 million shares, what does the price do in the auction? The auctioneer goes, hey, going 406, nobody raises their hand. What's next?
405.
Well, they go anyone at 405. And this guy here, maybe at 404, this guy here is like, hey, I'll raise my hand. I'll buy $10 million. The seller that has 9 more orders of, let's say $10 million, he's like, okay, sure. You buy right here. They pump the stock up a little bit, right? You get a little bounce. So you get this. And then this seller here is like, okay, well, I bought it cheap at 404, but this seller has 8 more orders of the same size. And he's like, okay, well, let's see if this seller here is real. Now I'm kind of covering the higher highs, lower highs. This guy's like, oh shit, I don't have any more $10 million. What does the auctioneer do? Anyone wanted at 404? Nobody raises their hand. What does he do? What does Macy's do when they're trying to get rid of inventory and nobody's buying it?
Keep slashing the prices.
Oh, you keep making sales. And now they're like, oh, okay, well, nobody at 402. How about we go, and the auction happens so fast, right? You have high frequency traders, you have algorithms. This happens milliseconds, right? And this guy goes, oh, 401, nobody. Okay, 400. And then you see a large bid. You see a large bid at 398. Let's say you see $80 million bid of SPY at 398. What do you think is going to happen naturally by these sellers and buyers? You're going to see a nice imbalanced candle where literally it's going to look like this. It's just going to go whoop. They're going to trigger the price to go there, and that's where the imbalance happened. So the supply happened here, right? There was nothing, boom, you go where the demand is, right? So they sold it. They couldn't get rid of it here. You were able to get rid of it here at the large quantity, and you're basically selling at that point, and that's exactly what can happen here. This guy here might present like a little bit of support if the government doesn't step in with their PPT team. And then, if it breaks below, you come back here for a rejection. This guy will be eaten alive, and he's going to be down about maybe 3-4%, probably in the same day. Does that make sense? I don't know who asked. I was not familiar with the voice. Hopefully it makes sense, whoever asked that. I don't know who it was. Okay, so let me, does it make sense to everybody how kind of you look at the things and chart them out, find the VPOCs, find the demand zones? Does it all make sense?
Yeah, that makes sense. So you would also, if we were to bounce to 415, you'd also be looking to short it there, right? And then just stop above 415.
Well, if we come back to this range, I would expect responsive sellers to come in here and push the price down. You could short it here correctly. It's just that we don't know if this is going to be a distribution or an accumulation zone for a move higher, right? So we had the hot numbers, for month of July, which means the economy is still doing well. So that means the rate hikes still need to continue. So, and they've been trying to downplay it where it's 50 basis points or 75 basis points. But obviously, neither one of those has cut it yet. None of those rate cuts that they suggested have put a dent in any of it. Even in the federal real rate is at 1.5. So they're reducing inflation by 1.5%, which is woohoo. Now we're at 7.5 instead of 9. So it sounds like everybody was same kind of like COVID. Oh, it's not a big deal. It'll just go away when the summer comes. You'll be good. And then all of a sudden, the whole fucking world shut down, and everybody's trying to freak out. And then you get the supply chain issues, the demand issues, shortages, and now you get the inflation or whatever phase we're in now. So I don't know. Would I short it here? I probably would not take a short at 415.65 unless I see some kind of candle. Let's say, I would look for a 30-minute candle if I see a hammer or something building like this. And I would probably take it right below it. Like, let's say we push to 415, we get a nice little rejection or something. I would probably wait for the next 30-minute candle at that level to tell me what I should do.
Okay, cool. And you explain the difference between distribution and accumulation? Like what's
Yep. I'll find one and I'll show you that. Yep. So let me just make sure I got all of this on SPY here. Check off all the points. There's a nice little trend line here that's holding SPY. They held it before. So if we were to come back at this 410 level, this could be a nice bounce play as well. So the way it could go is, we come back here and you hit the 410, and then even if you get it back to 413, this might, this freaking arrow thing never stops. It just continues. So this might not be a bad play here. If we do get a bounce here, this might be a beauty here. And then if that breaks, this means, if you guys recall that NVIDIA 3 months ago, we had the same exact setup. When it was breaking the 200s, we had the trend line and a psychological 200 level. Here we have a 410 level, which give us maybe about $4 or $5 on SPY. If we dump here, it's literally telling you that we're going to go down all the way to this POC. There's nothing holding it here. So if we are able to break this, retest short, and then if you see candles getting smaller and you see the little curl happening, find the little accumulation zone, and I'll cover that right now. You'll see how you can play that. So let me show you accumulation. Okay, so if you look at the stocks on a bigger scale, let me get out of the log scale. So if you look at, for instance, here on the bottom, it's usually a zone where you have a little bit of contention on the price, right? They're not agreeing to go on the price higher or lower. In this case, this was the accumulation where they accumulated the shares and they pushed a little bit higher. So that's what happened on SPY here. Once you're able to break 39.48 on SPX, that meant that, we're going to go higher. We still haven't made a higher high on it. So 477.51 would be the level that we are kind of after on SPX. Once you break this, pretty certain that you're going to be going all the way to about 200 on this. But this is your accumulation zone right here. If you look at, guys, please go on mute. Come on. If you look at it here, this is your distribution zone. You got in here and you see how we're kind of dancing around, accumulating. Remember, these are 3-day candles. So even if you go here on the weekly, you see that we are accumulating in this range. We're not really making strong highs or lows. We're just kind of dancing in the range, just like here. So this was your distribution zone here, and this was your now current accumulation zone that happened. These happen a lot, and my favorite one is on the Netflix or even Amazon. If you look at Amazon on the monthlies, so if you go on the monthly candles, right, and this happens on every time frame, right? So if you look at Amazon here, and this was a really, really good example. So here's Amazon right now. Every textbook that I know, that I've read, that I've traded, here's how this works. Usually hedge funds, I don't know your experience, and I don't know your voice. So hedge funds like to get 10 times their money, right? And there's something called Wyckoff theory, and you want to get familiar with that. We'll cover it a few times in this training courses here, but you see here they accumulated a lot. Then here it's called the burst or a thrust. They pop it up and they test the market to see, is there any buyers, any retailers that want to take the price? Well, then they see yes, they usually drop it back inside or close to the demand, and then they proceed higher. They'll set up another accumulation zone like they did here, and then they keep going higher. Then right before COVID, started, by accident, somehow they started accumulating this stock since 2018. And then this level right here was critical for it. So if you look at this, they accumulated Amazon shares literally here since October or February 1st, 2018, all the way till April 1st, when the COVID happened, Amazon literally took off. So now if you go here, the level of 102.53, we popped from this level, we almost made 100% on this money. And then if you go from the bottom, they went from $14 all the way to $200. So they probably made, 10 times the money on their trades. So here you notice, right, if you're accumulating here, think about these bottom ones as warehouses. think of it as you're trying to, let's say there was a fidget spinner and you're the maker of it. What would you do to your warehouse if you knew it's a hot demand and everybody wants it? I want the person that asked, what is accumulation? What would you do if you're trying to sell fidget spinners and it's a huge demand and you're the only one that can buy it? What would you do?
I would be just trying to make as many fidget spinners as I could.
Okay,
Buy as
so
many as you can.
you would try to accumulate your warehouse as many as you can, and then you would try to sell them and see if there's a market. It's called testing the waters, right? Or testing the market to see who wants it, right? Then you test the waters. You're like, man, this thing is selling like hotcakes. You're like, man, can we call the guy in China or wherever you're getting them? Can they make more? And they're like, yeah, man, we can make more. It'll be a couple of months. And then what do then? You suppress the supply, the market, so you can jack the price up in the meantime, and you accumulate some more. And then you're like, oh, okay, man, my two warehouses are pretty full. I need to start selling these. Well, what do? If you have two warehouses full of inventory of items, just like any other store, you're going to have sales, you're going to have marketing, and then they take off. And same happens in the stock. Once all of these hedge funds, you see JPM and all these banks, all of a sudden they start flipping like PayPal. They started flipping their, the buy targets. Oh, PayPal 140. 2 months ago you were lowering it 70. Now it's 140. Like what changed? Not much change. Is that you're able to accumulate the shares at a much cheaper price, and now you need to increase the PR and publicity to be positive. So then the publicity comes in, the PR comes in, and they're like, man, you're making a killing on these fidget spinners. You're buying them at 18 average, and you're selling them now at about $100. And here you're like, man, $100, I'm going to offload as many as I can, and you sell as many as you can. Then the new buyer, let's say the new guy that was talking here, is like, man, I saw Mike do it here 2 times. He bought these fidget spinners, man, but he bought them cheaper than I did, and he's done with this business. And this guy's thinking, well, if he did it 2 times here, maybe I can buy him at 80, 90, and I can sell him at 200. Well, that's exactly what this guy does. He accumulates as much as he can here, and then he sells it, and he bought so much. I mean, if you look at this accumulation here on the monthly, right? This lasted 820 days. Okay, so if you're accumulating a stock for 820 days, the longer the accumulation, the more violent the move. Okay, just remember that. It's going to be a really strong trend once you break this level. Well, then you're like, okay, well, I accumulated so much, man. I've been collecting for 2 years these fidget spinners, and I need to sell them so I can make some money. And then you start the good news, and somehow magically the COVID happens, and Amazon hits a lottery. Everybody can't go anywhere. What do? You start ordering on two-day shipping, and boom, Amazon stock pops. And what are you going to do here if you accumulated 100 and it's 200?
Trying to sell them.
Oh yeah, you're going to sell them as much as you can, but since you accumulated for 120 days and you have billions of dollars of work, can you sell it in 1 day?
Of course not. There's just not enough demand.
Not enough demand, not enough buyers. So what you do is you sell every pop you can. You sell a little bit. You sell a little bit. You sell a little bit. And you see here, your volume accumulation was 57 million, and the whole distribution here was 35 billion. So I would say you probably have a little bit more shares left here to sell. Well, the only thing that happened is, you had the markets work against you, and they brought the price back to where it accumulated. So maybe you bought some more here, and hence what happened here. You popped from the same level because you're like, okay, well, maybe I should buy some more fidget spinners at the same price I had it before and see if I can make a little bit more money. But now, you're coming to a point where this guy, maybe, like you said, there was not enough demand for fidget spinners this time, and I didn't sell all of the warehouse that I had. You look at the volume, 57 billion versus 35 billion in distribution zone, there's still about $22 billion worth, right, or volume-wise. So it tells you, these are shares traded, right, buy, sell, but it tells you that the same volume between the distribution and accumulation is not close. So I would expect, and I would have expected Amazon to reject here, and you guys know I was fairly bearish on rejection coming on Amazon and swinging some puts. This looks like a pretty good spot to short it and go along with these guys. because these guys are much stronger than these boys. So now I'm just waiting and watching. And then if you do, you know, kind of, if you just do this, this is going to be fun. It might blow you off your feet. You go from here, and let's say you grab it to the bottom. They accumulated at the heaviest volume at $15 on this stock on Amazon. $15 all the way to, you know, you're talking about 200. So these are the, you know, the early guys. You know, these are the inventors who got the shares. They bought them, the hedge funds, the JPMs. They bought them here. This is probably where, you know, you have a big hedge fund starting, and then here's your retail buying. And they're buying at 160 when everybody's trying to get rid of it. So they got so many good news. They set Amazon to 5,000. I've seen those posts everywhere. Retail's like, man, Dad, look, man, just put in $200,000 at Amazon at 150, you know, at 3,000, man, it's going to 5,000. And then, whoop, thank you for liquidity. They're going back down to where, you know, it should be. So that's how accumulation distribution works. So hopefully I did not confuse you, but that's the best way I can explain it.
Very informative, Shorty.
Okay, hopefully that was good for you. Okay. All right, guys. Well, thanks so much. I'll catch you guys tomorrow and get some rest, and we'll be ready to fire tomorrow.
Thanks, Shorty. You crushed it
All right.
tonight.
Thanks,
It's a really
guys.
good class.
Thank you, Shorty.
Bye.